When you think of the market itself, it is about 80% of the entire stock market. It covers every industry, it covers every sector, and most investors don't beat the market itself. When you start thinking of investors, almost 90% of investment advisors cannot beat the S&P 500. And this benchmark is kind of crazy to think. It contains the 500 largest companies in the United States. Actually, it's 503 because some stocks have two class of stocks in there. When it goes to the portfolio, the VOO this year has been over 30%, which is kind of incredible in the past 12 months, over a 30% return. And when you start thinking about the index's historical returns, it's about 10.5%. Now, you don't get it over every year, but in the long term, it has been remarkably consistent when it comes to the returns. Even looking at the VOO as guaranteed returns or generated returns of 271% or 14% annually over the past 10 years, which is kind of crazy. Even so far this year, we're seeing it up about 22. In the last 12 months, we're seeing it up over 30%. We know this is not going to go on forever. When it comes to the Vanguard ETF, and of course, I do hold this one personally in my investment portfolio with a index fee, a low expense ratio of a 0.03, which is kind of crazy. Virtually all of the money that you put into this is going and really working incredibly well for you. Now, of course, when it comes to index investing, analysts believes that it is poised for a little bit of a downturn next year, but nobody knows. It's really a question mark. They say that we could see a pullback in the VOO or the S&P 500 of roughly 20 to 25%. When you start looking at a multitude of years, if I'm investing at that 20-25% reduction next year, I am buying it at a 20 to 25% discount, which is exactly what we want. I want it discounted. I want it to go down because I'm not close to retirement and I'm still putting money regularly into the VOO.